Well, all right. Good for you. US Bank, I've heard is very good to work with. Quick question asking for someone, what's the difference between infinite banking and the money max? Totally different. Totally different. The infinite banking concept is absolutely beautiful. It's becoming your own banker as far as you're handling your money, you're recapturing your payments. A beautiful concept. I absolutely love. That's now my favorite thing to do. The Money Max is kind of like online banking, but what you do is you sign into your account and you just look at what it tells you to do with your money for that day or that week. So it's more than a software. I hate to call it a software, but what it does is it eliminates interest. So if you are paying 4% on a mortgage, which we know is truly 80, oh my gosh, yeah, 80%. So if you've got a 4% mortgage, you're truly paying a volume of interest of about 80%. The Money Max can bring that down in most cases to about 2%. So 80% to 2%. That's why they eliminate debt so fast, is they are an interest eliminator. And it's also kind of a budgeting like thing, that shows you exactly what to do with your money so that you're not second guessing anymore. If you get an extra $100, you put it in the Money Max and it shows you exactly where to put that so that you're paying off debt quickly. Okay. So it's kind of a do all as far as telling you exactly what you need to do so you're getting into the debt elimination period faster. So the Money Max is always going to beat the line of credit by about 2 years. Okay. Always. So if I give you a 7-year payoff, the Money Max is going to come in and say 5 years most of the time. That's just because it's an interest eliminator. How big of chunks should you pay towards your mortgage? 100% of your PLOC or less. Depends on your cash flow again. Depends on the credit you have available outside of that PLOC, meaning I never use my HELOC, for example, over 50% because I don't like having a large balance and I don't like feeling like I've got a big debt to pay. But based on my cash flow, I'm going to know how quickly I can pay off that line of credit. So your chunks need to be in amounts that your cash flow can handle, I think, every 5 to 6 months. Um, what does that mean? So if I have $2,000 a month in cash flow, for example, and I want to do a $10,000 chunk into my mortgage, you would just take the 10,000 and divide that by your cash flow. So if I have 2,000 per month in cash flow, then that means what? I'm going to pay this off in a little over 5 months with any interest. So you might do a $10,000 chunk every 5 months because you're going to have it paid off with your cash flow. So that's kind of the way I look at it, is how much cash flow do you have? Um, and if you want to do larger chunks, have at it. If you want to do a $20,000 chunk and then have it paid off within, less than a year with this 2,000 cash flow, that's kind of the way I like to look at it because it keeps me motivated to be looking towards or forward to that next 5 to 6 months. I always like to move the money around. So I look for ways that I'm going to be bringing debt into the line and then watching my income pay it down fast. Okay. I guess the better question would be paying a mortgage. Would it be best to go infinite or money? It depends. Again, I've seen the Money Max beat infinite banking. I've seen infinite banking beat Money Max. It just depends. That's why we have the free consultations, is so that you can try the Money Max, have your personal analysis. That's free. They're going to tell you what they can do based on the debt that you have.